Hey everyone, welcome back to the channel. In today's video, we are going to be talking about a crazy article I read yesterday, which says cloud infrastructure revenue approached $80 billion this quarter in Q3, with AI propelling the market forward. Of course, right? AI, that buzzword you keep hearing about, it's definitely real. It's bringing in a shit ton of money. But let's look at this. The cloud infrastructure market has put the doldrums of 2023 firmly behind it with another big quarter. Revenue continues to grow at a brisk pace, fueled by interest in AI. Of course, Bedrock and Intelligent Cloud are probably killing it. Synergy Research reports revenue totaled $79 billion for the quarter, up $14.1 billion or 22% from last year. These numbers are pretty unfathomable, but I'm not surprised by the growth, right? I think the growth, and I've been looking at some resources. Gartner did an article where it's surpassed 675 billion in 2024, or it's always expected to. On top of that, I think cloud growth over time since like 2013, which is when it really started to take off, I think, has been crazy, right? It has grown significantly since 2013, with the public cloud market capitalization increasing from 283 billion to 1.3 trillion. Now, this is a Gemini. Isn't that crazy that we're talking about how AI fueled this? And the answer I just looked up is from AI on Google. But let's see if there's like an actual legit table that I can see. Of course, it's behind a paywall. But whatever. Long story short, it's been ridiculous, right? And I'm not super surprised, like I said, because AI is sort of this bubble right now. I don't know when it's going to burst. I personally feel like the LLM world has kind of hit its peak or near peak. I don't know how much better it's going to get. I'd love to hear some opinions in the comments. You might be like, you're an idiot. You're so wrong. We haven't even scratched the surface. But I am curious. To me, it feels like it's pretty good, but there's a lot of hallucination still, and it has a long way to go to be like actually practical. I think a lot of people find it annoying. But the bottom line is that the cloud, in spite of last year's hiccups, is showing little sign of slowing down. Duh. Even with some element of political and economic uncertainty on the horizon, of course, Synergy chief analyst John Dinsdale sees a market that will continue to grow, with the firm expecting the market to double in 4 years' time. Took 13 quarters to double from 40 billion to almost 80 billion. Once again, this makes sense. What is that? Moore's Law. Moore's Law, if you're not familiar with it, it says the number of transistors on an integrated circuit within like a semiconductor or a microchip will double every 2 years with minimal rise in cost. So this means Intel, Apple, NVIDIA are going to continue to just make hand over fist, and essentially all these companies, these cloud companies like Azure, like AWS, like Google, are going to be using their chips, right? So chips are getting better at a lower cost. They're pumping them into these cloud services, or the cloud services are paying them for these chips, which we know AWS and NVIDIA have been partnering together since 2010. And with these Graviton instances that are coming out that they're running these workloads on, like AWS Bedrock and whatever their language model training service is just going to continue to get bigger and bigger. So people are going to continue to spend money. On top of that, I think what this probably fails to say and speak about, and we haven't finished the whole report yet, but a lot of it's probably coming from EC2 serverless virtualization, right? Like that's like the majority of what I see people using. Like everyone's running virtualized workloads. You obviously have services like EKS, AKS, GKS, which is the Kubernetes service to run infrastructure, ECS. They're all running containers on these nodes. These nodes are virtual machines, which are like EC2 instances, or essentially just computers, right? And you're paying for those computers. Usually they charge for like virtual CPUs. They charge for like CPU hour. So the more you use them, the more you're going to spend, especially when you use something like Graviton. However, I did read a report, and hopefully I can find this, AWS Q2 revenue report. Read about this the other day, and it was some of their highlights. They mentioned that Some of the highlights, yes, they delivered the new AWS Graviton 4 based compute instances, providing up to 30% better price performance than the industry leading AWS Graviton 3 instances. So I guess that kind of fits with Moore's Law, where semiconductors are getting better, price is dropping though, and in turn, they're giving you a little bit better price. I think that kind of checks out, but tell me if I'm wrong. I think that might be a little bit of a hot take. But like I said, these AWS Graviton processors are running, they're definitely running NVIDIA chips. Maybe someone knows. Let's look it up. Does Graviton run NVIDIA? Look it. Told you. Okay. One surprise this quarter was Microsoft Intelligent Cloud, which includes Azure, missing analysts' estimates. The company reported $28.52 billion versus analysts' expectations of $28.68 billion per CNBC. Azure still grew 30%. Damn, that's pretty crazy. Per Altimeter, partner Jam and Ball, so it wasn't all bad news. Denzel says that it's important, however, not to make too much out of the miss. Their Intelligent Cloud quarterly revenue came in within the guidance range provided by Microsoft 3 months ago, so it's just a little bit outdated. It's probably done more. To be growing a $28.5 billion business by 19% a year is no mean feat. Azure is the largest chunk of Intelligent Cloud, and it grew by 29%. Is Intelligent Cloud, like, does that encompass Azure? Or does Azure encompass Intelligent Cloud? Interesting. I don't know what makes up Intelligent Cloud, but I assume Intelligent Cloud's like the higher arching, and then there's Azure under it maybe, which is actually rather impressive. Yeah, Azure's impressive. Their UI does suck though. Amazon reported revenue of $26.3 billion for this quarter, up 19% over the prior year, as it seems to have settled into this growth rate range for the time being, after dipping into the 12% and 13% range in 2023. So you can see about this time period where we spike Q4 of 21, economy was pretty good, went to shit, starting to get better. Devs keep getting laid off though. I mean, what did Intel layoffs? You guys just see this? Intel will cut over 15,000 jobs amid struggles to turn itself around. I mean, yeah, Apple cut their deal with Intel. They make their own chips now, and they're better than what Intel's doing. NVIDIA's taken over the world. What happened to AMD? Is AMD still like doing big things? Let's look at their stock price. I feel like they've fell down. I invested in them in like 2021 when like everyone was just investing in stocks like crazy during like COVID times. And I just like took my money out because I was like, I don't know what this company's even doing. But they don't seem to be like a huge competitor anymore, which is crazy. It's going to be interesting to see what they do. Google Cloud had a nice quarter, pushing over $10 billion for the first time, up 29% year over year. But it's important to note this number includes Google Workspace. Of course, Google Workspace, Gmail, all the services they offer are going to be a huge driver for them. More importantly, perhaps, the company gained a full percentage point of market share, according to Synergy, whose numbers don't include Workspace. Okay, so that's good. At least Google's starting to play. And I really like Google as a company, I will say. I don't really know the ins and outs of everything they do, but I feel like they make a pretty damn good product. I mean, a lot of love for them considering they created Kubernetes pretty much. The overall market share numbers came out to 32%, around $25 billion for Amazon, 23%, around $18 billion for Microsoft, and 12%, around $9.5 billion for Google. It's worth noting that Microsoft lost approximately 2 percentage points of market share over the last quarter, according to Synergy, yet continues to grow at a brisk rate. Cool. There's some seasonality to Azure numbers. That happened again. While Azure did not grow relative, both Amazon and Google did in their market. Okay, this is interesting. In the next tier of companies, Oracle nudged up to 3%, passing IBM and tying Salesforce for 5th place overall. While that might sound good, the big three account for more than 73% of the share. I think Salesforce would be in a better place if they focused on their actual products and stopped making shitty Matthew McConaughey commercials on why AI is cool. Just a take there. IBM. IBM's such a cool company though, man. They've been around forever too. They do some really, really neat stuff. A lot of research. Well, that might sound good. The big three, 73% of the market. So really, we're looking at these like three conglomerate companies and they're just taking over the cloud space. And you're right. I don't think this is slowing down. If you're thinking about how do I get into tech and maybe what do I go down, try to become a cloud engineer. I don't even know what that really entails, but there has got to be jobs out there for that. And it's probably very hard to become like a very good cloud architect. And also, I know from prior experience working with teams that a lot of the time they spent in the last 2 or 3 years was cutting down cloud spend. It's probably still a job that devs do on a daily basis, and it's such a hard problem to solve, but people are really killing it. Like my last company really reduced their cloud spend by putting in a lot of effort, and those engineers are brilliant. So there's definitely a market out there, and I think it's a good thing to get into. But it does get confusing looking at the different ways the companies and the firms that watch them count cloud numbers. Ball is looking at publicly reported information. Synergy looks at infrastructure as a service, platform as a service, and hosted private cloud services. It does not count SaaS and includes some of its own market analysis in its numbers. So yeah, obviously they're going to be skewed, but I still do think that the writing's on the wall that cloud is just bigger than ever and it's going to continue to get big. I did hear that people are going on-prem now, that there's like a switch to go back to on-prem from the cloud. This seems like whatever was out there in the last like year about that is just a hoax at this point, maybe. I don't know. Like I know hybrid cloud and using different services in different clouds is popular, but I really thought people were going to start to go back on-prem. But also companies continue to lay off devs, and to run a successful like on-prem infrastructure takes a lot of engineers, right? So if you're continuing to get leaner as a company, and you're laying off devs, it's going to be really hard for you to run on-prem infrastructure. You're probably going to pay the cloud to manage a lot of it for you. But with that being said, I think this is a super interesting article. I'm excited to see where this goes, but that's a video. I'll see you guys in the next one.